Good morning, everyone. Welcome to today's Canvas Concept Call. Today, I've been asked to handle this 10-minute call this morning. I'm excited to do so, but this is one that's generally fun for me. The only problem is I only have 10 minutes to share, so I hope I get everything out there that I want to get across today. So today's topic is one that is generally fun for me. The only problem is I only have these 10 minutes to do it. So I've been in the insurance business for over 40 years. During this time, I've seen products evolve, regulations tighten, clients' expectations shift dramatically. But one thing has never changed. The real benefit of life insurance is for the survivors, the families, the business partners, the employees, the people left behind. My father used to say when people asked him what kind of life insurance is best, and he would say, "Yes." That's the one that's enforced the day you die. That line has stuck with me throughout my entire career because no matter how sophisticated the products became, the purpose remains the same: to make sure there's a check there when it's needed its most. And I like to remind advisors, people don't remember you for what you sold them. They'll remember you by how you make them feel. So how do you think a family will feel you show up with a tax-free check for $250,000 or even $2.5 million? That moment changes lives. It's why we do what we do. When we slow down and really get to know our clients, not just their income and assets, but their values, their fears, their goals, life insurance transforms from a policy into a plan. Today, I'm going to touch on three different areas where this understanding makes all the difference. First area is family protection, personal needs, business planning, including key person, buy, sell, employee retention strategy, advanced estate plan, charitable planning, where life insurance becomes the cornerstone of legacy and will and wealth replacement. Put your track shoes on. When we meet a new client, we often start with, how much coverage do you want? But the better question is, what do you want to happen for your family if something happens to you? That answer is always the most powerful. Most families don't just want to replace income, they want to preserve their way of life. They want to make sure that their spouses to if they're to stay in the be able to stay at the same home. They want their kids to be able to go to the same school. They want their loved ones to have time to breathe, not have to rush into financial chaos as they're while they're grieving your loss. Life insurance creates the stability. It's a love letter written in financial form. Sometimes this means simple term insurance, inexpensive and designed to product protect the years when it's when the need is greatest. Or sometimes it's a permanent policy that builds cash value for living, college funding, retirement income, emergency liquidity. The key is understanding the why behind the coverage. When you tie life insurance to what truly matters to the family, protecting a dream, a home, or a future, it becomes something they value, not something they tolerate. So now let's move to one of the most overlooked areas, business insurance. Most business owners are just too busy trying to run their companies to think about what happens if something happens. But what if you ask the right questions? You'll find that life insurance can be one of the most valuable assets a business owner can own. First one is key person insurance. Every person, every business has someone that they cannot afford to lose. The founder, top salesperson, operations leader. If that person was suddenly gone, what would it cost? Lost clients, disruption, hiring, training, instability. The ripple effect can be totally devastating. A key person protects against the risk that business own that the business actually owns the policy, pays the premium, and is the beneficiary. When tragedy strikes, the tax-free death benefit buys time to stabilize, recruit, and reassure lenders that the company will continue. That check can mean the difference between closing doors or continuing the legacy. The other area is buy sell agreements. If you've ever seen a partnership fall apart because one partner died without proper funding, you know how ugly that can get. Suddenly, the surviving spouse is running a business with a deceased partner's spouse or children that they don't have any real experience in understanding the business. A properly funded buy sell agreement solves that problem. Each partner owns a policy on the other. When one passes away, the surviving partner uses the death benefit to buy out the deceased partner's share. It's quick, clean, and fair. The business stays intact, the family gets paid, and everyone wins. I tell owners all the time, if you've gone through the trouble of drafting a buy sell, make sure it's funded. A document without funding is just paper. One of today's biggest challenges for businesses owners is keeping that top talent. Salary and bonuses don't create loyalty, but a well-designed executive retention plan using life insurance, it can. So here's how it works. The company identifies a key employee and funds a policy on their behalf. Over time, the policy builds cash value, accessible, say after 5 or even 10 years or more as a retirement bonus. If an employee leaves early, they give up that benefit. That's what we call golden handcuffs. It's what keeps people in place and rewards loyalty. It's a win-win. The business gains retention and stability. The employee gains a long-term benefit, and the plan can be structured to be both tax efficient and flexible. When designed properly, this strategy becomes a powerful tool for recruiting and keeping key people, especially in competitive industries. Again, in this case, life insurance isn't about death, it's about keeping the business alive and thriving. For high net worth clients, the conversation shifts from protection to preservation. They're not worried about running out of money, they're worried about running out of time, liquidity, and control when transferring wealth. Estate taxes, settlement costs, and dividing illiquid assets like property or businesses can create a nightmare for heirs. That's when life insurance becomes a great equalizer. A properly structured life insurance policy, many times is owned by an irrevocable life insurance trust, provides tax-free proceeds to pay estate taxes, settlement costs, keeping the estate intact, and therefore avoiding forced sales. So imagine this, a client who owns a multi-million-dollar vineyard or a ranch. They get ready to sell, and their heirs may owe $1 million in estate taxes. And guess what? It has to be done in 9 months. So without liquidity, they might have to sell the property just to pay the IRS. But with life insurance, those taxes are covered. The family keeps the land and the legacy stays intact. That's real generational planning. Life insurance also equalizes inheritances. So let's say a client has two children. One runs the family business and the other doesn't. Instead of splitting ownership awkwardly, the client uses life insurance to create equal value. Child A receives the business, child B receives the insurance proceeds. It's fair and keeps the family intact. Then we have the area of wealth replacement, charitable planning. If you look at some of the most creative uses of life insurance, wealth replacement and charitable planning. Here's an example. A client donates a highly appreciated property, $2 million property, to a charitable remainder trust. The charitable remainder trust sells the property tax-free, provides lifetime income, creates a charitable income tax deduction. But when the trust ends, the remaining assets go to charity, not the family. That's where life insurance bridges the gap. A portion of the charitable trust income or tax savings funds a policy typically owned by an ILET or to replace the wealth for the family. At death, the charity receives the remainder of the trust and the family receives a tax-free death benefit. That's what we call double legacy, giving generously while preserving family wealth. When structured properly, life insurance becomes the hinge that balances generosity and legacy. All of this, family, business, and estate, comes down to one guiding principle: know your client. You can't design the right plan with first understanding the person. That's why we start every conversation with curiosity. Who depends on you? What keeps you up at night financially? What would happen if you weren't here tomorrow? What kind of legacy do you want to leave? When you ask those kind of questions, you stop being a salesperson and you become a trusted advisor. You're not pitching a policy, you're designing a plan. That's what separates transaction from transformation. So thank you so much for everybody for being on here today. I hope this was helpful and have an amazing rest of your day.